Traded it all.
So welcome back. My next guest has also been on with me many, many times. I have with me Ryan Larson, and he is the CEO of First Line Financial. Welcome back to the show. Happy New Year. I haven't seen you since before then, so Happy New Year. I want you to talk a little bit about yourself real quickly, and then what we're going to talk about today.
Love to. It's always best when you're talking about yourself.
Isn't it? The best.
Oh, yeah. Hey, I've been in the business for about 10 years now. Started off as a currency trader. Love the industry, love helping my clients. Really am passionate about everything I do with my clients, looking at their portfolios, just, helping them out with whatever they got, estate planning, tax planning, whatever they need.
You call yourself a portfolio designer.
Yeah, portfolio designer, because there's a big retirement puzzle out there. You got all these pieces, right? So you got, your 401ks, your savings, your IRAs, maybe some gold. David was talking a little bit about gold. That's a great asset. So you got all these pieces, but it's about putting these pieces together and making a comprehensive plan or a cohesive plan so you know exactly what money is coming in the door each month. So you could live, that full life and don't have to worry about, where your money's coming from.
Well, I also want to talk about second opinions, because there's also a lot of people that might even have someone that they're working with, but they're not so sure. They get a chance to hear people like you here on this show, and then all of a sudden they say, gosh, maybe I should be doing something like that. Do you do second opinions?
Yeah, second opinions for me is a must, because it's just like going into the doctors, right? I mean, one doctor might tell you one thing, the other doctor might tell you the other thing. Well, you need to hear different opinions, different sides of the story, and you need to really see what's going to work for you, right? Now, a lot of these people out there have just kind of thrown their, dart at the stock board, and they kind of hope it's going to go up. They place their money in stocks, bonds, mutual funds, exchange-traded funds, variable annuities, and they just kind of buy and hope that everything is going to be okay. But really, if you look at the last 10 to 15 years, I call it the lost decade and a half, because the markets haven't performed, right? So you place your money in the markets, you have all this volatility. David was just mentioning, how to preserve wealth, okay? So what are the other options? What are the other tools available to us that will allow us to build a plan and really give us that peace of mind?
Well, you've written this white paper.
Yeah.
First of all, it's not short. It's long.
It's a lot of information.
Well, I love it.
Good information.
And what I like about it, it really spells everything out. It's in color and has charts and it has everything. Because you're a very detailed person.
I love being detailed, and that's what you got to do. If you're managing, a client's wealth that they worked 30 to 40 years, I mean, blood, sweat, and tears. They've worked hard for that money. You better put the same blood, sweat, and tears into their portfolio as they have done into their own profession.
So here's what we're going to do. We're going to open up the lines for people to get this. It's retirement and what you need to know. It's everything as to what you need to know. And our number here is 602-277-5369. Toll free, it's 1-866-536-1100. You do free consultations. It's all about getting to know you. That's really what this is all about here. Also on this show, too, it's nice to hear somebody kind of the things of what they think about. Your office phone number is 480-729-6246. Your website is firstlinefin.com, and you can call in here. We want everyone to have this white paper. Get a second opinion, talk to him, and find out how he can design a great portfolio for you. 602-277-5369, and toll free, it's 1-866-536-1100. You also have a couple of seminars. You want to get that out about that?
Yeah, we're doing a seminar February 7th and 9th. It's going to be at Ruth Chris. Now, I have to address the audience that it is filled up pretty good. So there's only limited seats available, and that's very true. So Ruth Chris is very popular. We're going to have some great information there. It's not just one product sale. We're talking about how to build plans. We're talking about what you need to think about when you're building a portfolio. What are the different tools? We talked talked about how to preserve wealth a little bit earlier, and some of the tools. How do we do that? Well, we could put some money in gold. That's a good insurance. We could put some money into an actual insurance policy. We have annuities, different types of life insurance policies, index universal life policies. You have whole life. So you could actually go to the insurance companies, the most profitable companies, brought us out of the Great Depression. They know how to make money. They know how to protect money. So those are some tools how to preserve wealth. What are some other vehicles? Put your money in CDs. I call them certificates of disappointments because they haven't made anything, right? So we have to know all these different tools and how to preserve our wealth, but also too, if we have our our living expenses taken care of, and we don't need to worry about where our money's coming in. Well, why don't we try to generate more cash or more, portfolio returns off the rest of the income or the rest of the portfolio, right? So it's not about just putting all your money into an insurance policy, not putting all your money in gold.
It's diversifying the same way.
You got to do the diversification thing. That's in a nutshell right there.
And also, there's things you happen to specialize in annuities.
Yeah,
and there's good and bad in everything. And the only way you're going to know is to find out. And each person, one of them will work for that person too. It doesn't
right.
one size fits all.
It's not. And when I used to do an annuity seminar. Actually, the response that I got was great. But people are looking for that holistic plan. Whereas if you're talking about one product, right? It's just like, okay, are you a specialist in that product, or are you a full service firm, right?
And you are?
I'm a full service firm. Sir, I work in all three worlds of money. Okay, Carol? There's three worlds of money, folks. There's the banking world, the insurance world, and the Wall Street world. It doesn't matter what world of money we work in or what company or product we choose. I could get you any product or get you any, I work with any firm in the universe. I don't have any bias towards any one company or any one firm.
And that's a good thing. Now, you can call him. He does free consultations. The phone number is 480-729-6246. It's firstlinefin.com. Call in here. I know we've got people calling right now. And if the line is busy, just keep on calling. The number here is 602-277-5369, and toll free it's 1-866-536-1100. Get the white paper. It's retirement and what you need to know. It's everything from soup to nuts. Okay, what else should we talk about now?
Let's talk about that debt ceiling, or how much debt we're in. Folks, if you want to go to a really cool website, go to usdebtclock.org. usdebtclock.org. This is an amazing actively running clock that doesn't just show you the debt that we're in, it shows you the money coming in the door as well. So this website will help you understand.
So you can watch it on a minute-to-minute basis.
I did this seminar last year, and we had to switch out slides for this seminar coming up in February, because back then it was around 16 trillion. Now it's at $20 trillion.
Yikes.
And you know what? Not a lot of people, Carol, are talking about the 800-pound gorilla, the Medicare liabilities that we're under, or how about the Social Security liabilities, $15 trillion in deficit. So this is a very serious issue. I was at a workshop and once, and someone just said, "Hey, Ryan, why don't we just default on the debt? Just default on the debt to China." But I was like, folks, it's not about the debt to other countries. It's the money that they owe us, the American people. That's the problem, Carol. If you do the math, that's almost $859,000 per taxpayer that the federal government has borrowed on behalf of us, to get us out of this deficit.
Wow. So
yeah.
It's our fault.
It's our fault.
And we can't just get out of it.
Yeah, exactly.
Okay. We have our lines open here at 602-277-5369. Toll free, it's 1-866-536-1100. He does do second opinions for everyone as well. We've got his white paper that we're giving to everyone. It's retirement and what you need to know. It's everything from soup to nuts. I love it. Again, our number here, 602-277-5369. It's first firstlinefin.com. You can also call him direct at 480-729-6246. He does free consultations. He does second opinions. He's having this February 7th and 9th at Ruth Chris. He's having a seminar there. It's almost filled up. People love listening to him. Our number here is 602-277-5369. Toll free, it's 1-866-536-1100. Call in and get this white paper and get yourself educated.
Traded it all.
All right, so welcome back, everyone. We're talking with Ryan Larson. He is the CEO of First Line Financial. We do have this white paper that we're giving to everybody. We think that everyone should have it. It's informational, and you can make your decisions on it. But first of all, you'll know everything that you need to know. Seriously, everything you'll need to know for retirement. Our number here is 602-277-5369, and toll free, it's 1-866-536-1100. We're going to let everybody call throughout the rest of the show for this because we do believe that everyone should have it, so you just keep on calling. You've got your seminar. It's almost filled up. It's coming up February 7th and 9th at the Ruth Chris, and he does free consultation. He too is all about educating. You can call him direct at 480-729-6246 or call in here at 602-277-5369 and get this information. Okay, what about risks out there?
Carol, oh my gosh, there's so many risks. We have entitlement risk, which is the government programs such as Social Security and Medicare. Are they going to be there for us? We got market risk, right? What are the markets going to do? We have tax risk. Are taxes going to be higher in the future? Are they going to be lower in the future? What about sequence of return risk? Okay, sequence of return risk is, you're going to retire, but you don't know what market condition you're going to retire into. A lot of people back in 2008, they're getting prepared for retirement. All of a sudden, then we have this market crash, right? So now they have to actually keep on working because their portfolio values are not where they thought they would be at. So now what do they have to do? They have to go back to work. They have to work longer, harder to recoup those losses. And when I look at a portfolio, I'm probably sure that a lot of listeners out there understand what dollar cost averaging is. It's when you're buying shares or buying shares of a mutual fund or exchange at a certain price, and then it doesn't matter what the price is doing or what that fund is doing, you're going to keep buying it. If it's high, you're going to buy some. If it's low, you're going to buy some. Well, that's great if you're in the accumulation phase of your investing period. But now, when you're in your retirement, now that's called reverse dollar cost averaging. It's actually when you're taking money out of a portfolio that goes up and down in value. So if you're taking money out of a portfolio that goes up and down in value, well, now if it recovers, you're not going to recover to where you originally were at because you took out more shares. So that's called reverse dollar cost averaging, Carol, and that's the number one mistake that I see retirees making. So there's a lot of risk, entitlement risk, tax risk, sequence of return risk, but the biggest risk is reverse dollar cost averaging. Don't take money out of a portfolio that goes up and down in value. So how do we solve that? All right. Well, we might want to look at like an insurance policy because we know, let's say talk about annuities. They give you lifetime income. So it might make sense to, pull out money from your IRA, and it doesn't matter if the contract goes to zero. The insurance companies still have to pay you for the rest of your life. So it's a pension. That's what it is in a nutshell. Mm-hmm. So if you place that money into, let's say, stocks, bonds, or mutual funds, you may run out of money and you may also run out of income, right? So the benefit to the consumer with the annuities is even if you live to 145 years of age, which I see probably all your listeners, living to, most likely, the insurance companies are going to pay them for the rest of their lives. And if they pass away and it's set up as a joint account or it's in their beneficiary's name, it's going to pass on to their loved ones.
And it's guaranteed.
It's guaranteed.
But I don't understand why most people why doesn't everybody just do that?
Well, a lot of people, they don't understand understand about the legal reserve system, right? Most of the listeners understand about the FDIC, the Federal Deposit Insurance Corporation at a bank, right? Or how about the U.S. Treasury when you place your money into like a government bond? But you see, with insurance companies, they're backed by the claims paying ability of the insurance company, and then they have a state guarantee association that is protecting your money. So they're actually watching out for these different insurance companies, making sure that they have, dollar for dollar in reserves. They have what's called surplus capital. They have reinsurers that are protecting your money. Like if an insurance company goes out of business, well, there's going to be between 4 to 14 insurance companies making sure that you as a policyholder are still covered.
Now, we have our lines open here, and everyone who's calling in is getting his white paper that he wrote. It's all that you need to know about retirement. It's very long, it's very extensive, and I love that about it. And also, what else I like about it is it's understandable, okay? And if you want to, you can also get a second opinion by him. Our number here, 602-277-5369, and toll-free, it's 1-866-536-1100. Go ahead.
So, yeah, when you're looking at a portfolio, it's not just about, hey, let's put all your money into, an annuity. Let's not put all your money into gold. I actually had a client that just came in today, a very high net worth client, and I showed him some different options that me as an independent advisor, I don't work for anyone. I'm in charge of, me and my client's own destiny, right? So I showed him some opportunities and some tools that are available. And he said, Ryan, I've been with the big brokerage houses of the world, the Morgan Stanleys, the Edward Jones. Why hasn't anyone else showed me this stuff? And I said, well, because you're on the retail side of the street. Okay, over here I'm on the investment advisory side of the street, and right here I have to do I'm a fiduciary. I have to do what's in your best interest first. Okay, so it's not about, okay, let's just put your money into this stock because it's going to pay me the highest commission. No, we need to know what's your suitability, what's your risk tolerance, what's in your best interest, and what you're hoping to accomplish with your money, right? So it might be advantageous to look at different vehicles to generate more cash flow, and that's what we talked about in the meeting today. How to generate more cash flow with the same assets with different tools that no one else is talking to you about. And that's what I have up my sleeve, is I have different vehicles that sophisticated investors are using. We're talking about Harvard, Stanford, Yale, sovereign wealth nations. These are vehicles and tools that are available to us, but unless you're a specialist or unless you have access to these tools, you're not going to really get, kind of pitch these types of tools because these brokerage firms are packaging their own products.
Let me ask you something. You talk about somebody who has a lot of money. It doesn't mean that you have to have a lot of money. I want to get that out there because, no matter who you are, you need to think about what you're going to do when you retire. So let's talk about that also.
Yeah.
And I want you to also talk about somebody who might, when they should start doing this. Go ahead.
The earlier, the better. I mean, yeah, for our firm, it's not about how much assets you have. If you need help, I'm an ear and someone to lean on. Some people just need to talk sometimes about their finances. It's not about, I need to do business with, Ryan. It's about what can Ryan tell me, or what value can Ryan bring to the table that will help my situation out.
It's also about making your money work for you.
Absolutely.
It's all about that. Mm-hmm. And if you've never had somebody who's a financial advisor or coach like you are, that has, I don't care who you are, you really need to start doing that so that you can learn how your money can make money for you so that you can retire nicely.
I have a couple sisters and they're always spending it on clothes and nails but they came over, both of them, actually 2 nights ago, and they sat down with me and we just talked about finances, and they had no clue, but probably in the hour time frame that we spoke and talked about what they need to do, they're probably more educated than a lot of other people out there right now, just because they know now, okay, this is what I got to do. These are the steps that I got to take to be successful, and it's not hard. It really isn't. It's very simple.
If anybody listens to Bob Proctor, and I happen to do that, but I mean, that is something that he does talk about, and it's very important important that everybody does this. Again, obviously, you can help people along the way, and there's obviously, if you have whatever kind of money it is, you have to learn where to put it, and that's what you do.
Yeah, and
it isn't for every person's different. Go ahead.
Absolutely, everyone is different. They have, like I said, different pieces to the puzzle. I mean, my sisters, they don't have a lot of money, and they said, Ryan, what do I do? And the first step sometimes that people take is they start placing into a 401k or 457. But after you get through that accumulation stage, and now you went up the mountain, and now you're starting to come down the mountain. It's a different phase of life. It's a different game plan.
Tell us about it.
So, I mean, you have to really learn how to generate income from your portfolio. I actually brought a article today, and it's written by Robert C. Merton, and he talked. It was published on the Harvard Business Review, and he talked about the crisis in retirement planning. And a lot of people look at how much money that they have in their portfolio, right? But it's not about how much money you have, okay? It's how much income can be generated from that portfolio. Because if a client comes in my door and they have $400,000 and they say, well, Ryan, I need to generate $40,000 for the rest of my life, and this is all I got, well, sometimes that could be tricky. It could be hard, right? So we need to find solutions to the problem.
Now, he's got this white paper that he's written, and he wants everyone to have it. It's informational, and that's what gives you power. It's retirement and what you need to know. I love it, and I think everybody should have it. I don't care who you are. The number here is 602-277-5369. Toll free, it's 1-866-536-1100. Don't forget, the 7th and the 9th at Ruth Crick's. He'll be there, but it's almost full. Call him at 480-729-6246.